Hello fellow traders! So my dear viewers, beginners and experienced traders, today we have a special video that definitely shouldn't be missed. We will test the strategy created by a student of my academy. In this video we will use a combination of three popular indicators: Bollinger Bands, RSI and stochastic. You will see how effective this strategy is and whether we can achieve significant results with it. So sit back, there is a lot of interesting things ahead. We will conduct a backtesting of the strategy based on Bollinger Bands and RSI indicators. We will check it on 100 trades and see what the win rate and profit will be. Then we will evaluate its results according to the main criteria, and this criteria is: first one, the number of signals. This one shows how often the strategy generates signals to enter a trade. Second, signals quality. This is the main indicator of effectiveness of the strategy measured by the win rate. Third one, adaptability of the strategy, and a good strategy must adapt to different market conditions. And the last one, number 4, is of course simplicity, because as you know, simple indicator-based strategies are much easier to use than a complex method. Then we will add it to the leaderboard, where we will compare the win rate and profit indicators with other strategies that we have already tested on the channel. And all of this will help us understand how good the strategy is in real conditions. And you can find out more about the criteria and in general the 100 deal backtesting section in my playlist on the channel. The link is going to be in the description down below. And now let's get down to the day strategy. Alright guys, so let's get started with the settings of our indicators. So first of all, we need to add Bollinger Bands. So in the settings, it's going to be the period of 23. This is the central line. This is exponential moving average here. And of course, it's going to be 23. And the level of deviation is going to be 2. This is the difference between all of the lines on the top and on the bottom, moving away from the central one. You can choose whatever color you like, but I hate this standard one, the flipping yellow and green with yellow and green. Hurts my eyes, sorry. And I think everyone probably knows how to work with Bollinger Bands, and the main principle is when the price is going outside of Bollinger Bands, outside of acceptable deviation, the price trying to get back to the standard settings. Let me find right here, for example, good example. It goes outside of the Bollinger Bands and gets back to the middle grounds, to our exponential moving average line with a period of 23. We can see right here the same thing. Price goes back, as well as something else we need to talk about. We're gonna get a lot of false signals. So for example, if we're gonna enter into a deal for an uptrend, in every single candlestick here we will lose a lot of money. And one of the rules that we're gonna use today is we're gonna enter into a deal for an uptrend, for example right here, when the price goes outside of the Bollinger Bands, only in the moment when the candlestick is closed inside of Bollinger Bands. So for example, the second one here. And of course, this is not the only rule for this strategy. Additional indicators that we need for this strategy is RSI with standard settings, nothing special, and also stochastic, my favorite. So we have all of them on the bottom. Give me just 1 second. I'm gonna change the colors because again, it hurts my eyes and I do not like it. So everything is gonna be blue and yellow, and blue and blue. I love the blue color. Anyways, so let's get back to a business. Let's get down to business. Last one. Yep, now everything is correct for me. So this the colors that I'm going to choose today and what we get from those indicators. They will help us to get rid of false signals. How RSI works, I think you already know, again, because it shows the levels of overbought and oversold areas, and stochastic does the same. And when we're going to enter into a deal, we are going to look at RSI, the first one. So it's supposed to get out of 70 or 30 level, so higher or lower. So in this case, for example, what do we see? We see that the price went outside of Bollinger Bands on this candlestick, and this candlestick is it's getting back to Bollinger Bands. And we look at the RSI, we see that RSI went outside of the acceptable deviation. And the next candlestick, we also look at stochastic. We see that stochastic showed us a crossover and went back to the normal setting, so higher than 30. All of those confirmations, they are telling us that we can enter into a deal for an uptrend, and in this case it would be closed in black. So in this example, we see that it went outside of Bollinger Bands. We look at RSI and we see that it went outside of the limit of 70, just a little bit, but it did, and that is okay for the downtrend. And of course, on the next candlestick we cannot enter, but the next one shows us that stochastic was also like doing the crossover and it was getting back to the standard settings, and we enter into a deal for the downtrend and it will be closed in black. So for us to get this cemented in our brains, let me find a couple examples on how it works in real life, and then we will get to our backtesting. Okay, so guys, so as you can see right here, we have the setup for the downtrend. We see that RSI went outside of the limit of 70, and the stochastic is also higher than the 70 level. And we need to wait for the first candlestick is gonna be closed in the area of Bollinger Bands, and at the same time we're gonna look at stochastic and wait for the signal for the downtrend in the form of crossover. Alrighty guys, so all of the confirmations we have, and that's why we are entering into a downtrend. So RSI was higher than the 70, stochastic was also higher than 70 and showed us the crossover of blue and yellow lines, and it's also going down. So this candlestick is closed inside of Bollinger Bands, and with the strategy that we're testing right now, we're entering into a deal for 3 minutes for the downtrend, and let's see what is going to happen. Alrighty, so in this case the deal is closed in black. Not the really strong one, you know, but still we get the money, so who cares? Now let's try to find another one for an uptrend. If we can, we will talk about it. Okay guys, so I think right here it looks like we had a setup. The RSI is lower than the level of 70, stochastic is lower than 70 as well. We're expecting the stochastic to do the crossover thingy, and this is at least not that bad. And after first green candlestick we can see the crossover and we can enter into a deal. But the only thing, the author of strategy did not say anything about the situations like that. So we see that the price is just moving from like 1-2 points up and down. Is it a good idea to enter a deal because the price is just, you know, not fluctuating a lot? But I don't see the reason to not do it. I mean, I do, but still, let's do it because according to the strategy, there is no such a rule for not doing anything in situations like that. So now we're expecting the big green candlestick, the signal from stochastic, and we're getting into the deal. Okay, so while we are waiting for this one, I will look at other currency pairs. Maybe I will find something more interesting because I don't want to waste my time just waiting, you know. Okay, so nothing more interesting than this, and that's now we are opening we're entering a trade. I'm so sorry. That in this situation, we can see that all the rules are right according to the strategy. We have the signal from stochastic with the crossover. The green candlestick gives us the signal of stochastic. Everything else is also according to the strategy, and the price is seemingly moving up, and we are trying to get that moment when the price is moving up. Okay guys, so you saw my brain fart just a second ago when we started this deal, because I was looking at this situation, and as you can see, we lost the money right now. And I think maybe in situations like that, it's not a great idea to enter into a deal. But again, according to the strategy, author doesn't say anything about things like that. And I was thinking about my personal experience, and I was thinking that in situations like that, I would not enter here because we don't have any trend. The price is not moving just like sideways. It moved just a little bit on the top, just a little bit on the bottom. Nothing is happening right here, so that was a bit dangerous, but we can see what's going on sometimes with the strategies. So nothing interesting. Let's get to the back testing, and we're expecting 100 deals, after which we can see, like, we can make more like global things to say. If you want to learn more about strategies and learn how to trade on binary options, join my online academy. In it, I share all my knowledge and experience, and absolutely free of charge, you will get access to lessons on technical analysis, indicators, and other aspects of trading. Text me on my Telegram and I will help you start your trading career. The link to the Telegram is going to be in the description box down below. For backtesting, I'm going to use historical data from TradingView, and of course, I'm going to put everything into our table that we use for every strategy that we test on our channel. Usually, I use the minimal payout, like the normal payout of 80. Some of them are going to be 75, some of them 85, so the middle ground is going to be 80. And the balance is $5,000, and for every deal, we use $100. The rules for entering into the deal I just showed you, and that's how my indicators going to look. So let's put it on replay somewhere from here. And of course, now I'm going to wait for our first entry point, and I'm gonna do it with a 10x speed. We're finally done with backtesting, goodness gracious. So all of 100 deals that were opened, and the result is a 66% win rate. The result is actually quite nice. It's more than enough to have stable profit, and this is going to be third, fourth, or fifth place with other strategies that showed us a 66% win rate. But this strategy is a bit harder, but we're going to talk about it a bit later. And additionally, I want to say that this strategy would show us a better win rate if all of the moments that I showed you on the first deal, when the price is going back to Bollinger Bands, but there is still no signal from stochastic, don't open the deals, the win rate would be much higher, because most of the losses were in those moments. So I think that would be like 68, maybe even 70 would be the win rate without this mistake. But before we move on to the final assessment, I want to remind you that your likes and comments help the channel grow and create more high quality content. So if this video turns out to be helpful, don't skimp on those likes. So, in terms of the number of signals, this is probably not the most convenient strategy. Trading on one pair, you can wait for signals for a couple of hours, so I'll put 6 out of 10 here. And everything is fine in terms of signal quality. 9 out of 10 here for sure. 66% win rate is a really good one, but the main thing is that we have identified at least one way to improve this strategy. So if you decided to use it and improve it, then I think it's quite possible possible to raise win rate up to 70 or even more. Next one is adaptability. Adaptability is perhaps not the strongest side of the strategy. It works silly in the trending market, but there's quite a lot of false signals in the flat. So sometimes there were a series of losses, which are especially dangerous when using martingale. So I'll put 7 out of 10 here. And the last one, simplicity. Simplicity in general, you can put 8 out of 10 here for this strategy, and it's not really complicated. The main thing is not to rush and not to open deals without waiting for a signal from all 3 indicators. And the overall rating of this strategy is 34, which is excellent result. So I think this strategy is worth at least trying it on a demo account. But if the result is good, maybe it will enter your permanent arsenal. But remember, in order to become a profitable trader, it's not enough just to hone your strategy. Without the risk management strategy and trading psychology, it is very difficult to achieve good results without all of that. Speaking of which, I've covered the topic of trading and psychology in this video right here. If you haven't seen it yet, make sure to watch it. And that's gonna be it for us for today. Thank you so much for watching. Don't forget to like up this video, and I will see you in the next one. Bye bye.